So, what are cap rates doing in 2025? It's a really good question. And if you're a buyer, you're probably hoping the cap rates are going up. And if you're a seller, you're hoping they're going down. Well, in today's video, I want to talk about what we're actually seeing in the market and how cap rates are affecting valuations. A couple years ago, when the Federal Reserve raised rates really rapidly, what happened was we had a stall in the market. And basically, what it led to was a pricing spread where buyers were expecting 25 to 30% less for the properties they were paying for than sellers were looking for. If you're a seller of a property or you're an owner thinking of selling, oftentimes you're looking in the rearview mirror to try to figure out what pricing's doing. And that's a really good approach to do that. I've got some videos on looking at sales comps and selecting the best comps when you're doing valuations. But if you're looking at cap rates, here's the trick. Cap rates are really tied to today's lending rates and today's equity dividend rates. And what I mean by that is buyers are coming looking at properties, and they oftentimes are borrowing money from the bank, and they're expecting to get a rate of return in the form of a dividend on their equity invested, not to mention growth and value of the property over time. So basically what we're seeing is this ongoing kind of tension in the market between buyer and seller expectations for what a good cap rate is. So let's look at the 10-year Treasury, because the 10-year Treasury is pretty much a safe rate when you look at capital that could go into commercial real estate. Today, when I'm recording this video, the 10-year Treasury is about 4.1, 4.2%. So what that means is if you have $10 million in cash, you go buy a 10-year Treasury, the U.S. government's going to pay you anywhere from $410,000 to $420,000 a year in exchange for your $10 million. And at the end of the 10 years, they're going to return $10 million to you. Now, for an owner of commercial real estate who's looking to sell their property and they're expecting to get a 5% cap rate on the value of their property, $10 million is going to pay out $500,000 a year. Now, most buyers that are looking at commercial real estate look at the 10-year Treasury and they say, okay, well, I could get $410,000, $420,000 a year from the U.S. government. No growth really on that we can plan for. Or I can go buy this piece of commercial real estate, put $10 million to work, and get $500,000 a year. And it comes with tenancy risk, capital expenditure risk, leverage risk on the money, and varying demands of exit valuations in the future. So you don't really know where you're going to be. With the 10-year Treasury, you're going to get your $10 million back. On the $10 million real estate purchase, hopefully you get it back. So as a result of that, the risk reward spread in the market has driven buyers to demand higher cap rates than sellers have been accustomed to seeing. And so that same $10 million today, to go out and invest at a 5% cap rate and get that $500,000, now as we go to a 6% cap rate or a 7% cap rate, at a 6% cap rate, that $10 million is no longer $10 million. It's about $8.3 million, generating $500,000 a year. And at that 7% cap rate, it's $7.1 million and generating $500,000 a year. So this is where that 25 to 30% spread in the market comes from, where buyers and sellers are expecting different prices. So the good news is over the last year and a half or so, last year, I'd say 12 months, we've seen the bid-ask spread start to narrow, where sellers are starting to adjust their pricing more in line with buyer expectations, and we're seeing buyers still see commercial real estate as a great investment, and they're willing to stretch. In 2024, we saw the majority of those buyers come forward in the form of user occupiers. So these were folks that owned companies that wanted to buy real estate for their own businesses to use and occupy. In 2025, we're seeing more investor capital come into the market, but running into the same issues, which is seller expectations are still somewhat high in relationship to what buyers are willing to pay. And so as a result of that, we're seeing this spread occur. Now, if you're a seller and you want to wait for the market to improve, a couple things have to happen. Number one, the cap rates have to go down. In order for cap rates to go down, you have to have more money come into the market demanding investment in real estate. You need to see lending rates come down, and you need to see the 10-year treasury go down. So those three things have to happen. The fourth thing that would have to happen if all those rates stay the same is that $10 million that you are looking for your property would now need to generate about $700,000 in net operating income. That would mean that your tenants need to pay about 40% more in rent over what they've been paying in order to get you the same amount of equity out of your property that you would have gotten back in 2022. So rents have to go up, or we have to have the 10-year treasury go down, lending rates go down, and an abundance of buyer capital flood the market, pushing demand way up for investments in commercial real estate. So a little longer video than what I planned for today on cap rates in 2025, but wanted to give you an idea of what's happened, how the shift has occurred, and where it's settling. For the rest of the year, I do anticipate seeing the cap rates mainly hold pretty steady. If we do see an economic slowdown in the back half of the year, you'll start to see those cap rates go up. But at the same time, you will also see lending rates start to come down a bit as the 10-year treasury starts to come down a bit. So we'll see what happens, what's about to come. But for the most part, what we're seeing in the data is we're going to be pretty steady through 25. We're not expecting any major changes in the market. So if you're interested in talking about your specific property or your properties in your portfolio, you can hop on our website at mansardcre.com and request a consultation. We'd be happy to connect with you, have about a 10-15 minute discovery call, learn more about what you're looking to do with your investments in real estate, and then help you to figure out what the right real estate decision is for you today. Thanks for watching. Take care.